Here we go. Okay, good morning, everybody. This is Sean Roy with Averta Insurance. I get asked a lot about the CalChoice worksheet. So basically, it's your quote document you're going to receive if your employer group is getting benefits through CalChoice. It's actually overwhelming. It's a bit confusing. I try my best to describe it when I'm speaking with someone or going over it in an email. So I thought I'd put this video together and really explain this as best I can. Let me pull this document up so we can go through it together. So what I did, I kind of created my own worksheet here. The first thing you guys are going to want to do, right, is make sure all this content up here is correct. Okay, because this is what your plans are based on. You're definitely going to want to make sure your zip code and county is accurate. Okay, because the plans that follow are based on your zip code and county. You're going to see your employer's company name up here in the top left. You're going to see the effective date for your coverage through the group and through your enrollment. This right now, you see a lot of not available here, not applicable. Your current plan is, because you're not enrolled, this is going to have information here based on your employer's elections. So it may say 50%. Anyway, there might be a little data there, but as long as your name, your gender, and your age, and your zip code, and your county is accurate, we're going to be okay. All right. So here it explains your employer has selected the silver tier. Now, this is based on an example, so yours may vary. Okay, your employer may select the gold tier, the most richest plan, or the most inexpensive plan, and what level, A, B, C, D, E, F, G, goes through all the half the alphabet anyway. So for this specific example, it says your employer has selected the silver tier and has agreed to contribute 50% of the lowest cost employee rate for HMOG. Okay. And 0% for your dependents. So that means if you're enrolling yourself and your spouse, you get 50%, covered off the sponsored plan for yourself, but your spouse is completely out of pocket. Okay. So let's go through this. There's kind of a lot. I mean, just to briefly show you what I'm talking about, you could see the pages just scroll and go on and on and on. So it's a little overwhelming, especially if it's the first time you're seeing this. Okay, so let's just quickly go through it together. It's not as painful. It's not as bad as it appears. Okay, so the yellow highlighted plan, no matter what it is, in this example, it's United Healthcare HMO Silver G. Okay, using the Harmony Network through United Healthcare. This is just the example, but the highlighted plan is the plan your employer has chosen as the sponsored contributory plan. Okay, so whatever highlight, if plan number 10 is highlighted in yellow, that means that plan is your employer sponsored plan, and that means this is the cost out of pocket for your employer and yourself, right? 50% to cover your monthly cost for the plan. So there's a monthly breakdown here of premiums. This column is based on pay period. So if you're paid twice a month, twice a year, once a year, 12 times a year, once a month, whatever your pay period schedule is going to appear right here. For this example, it's 26 weeks. And that is indicated here based on 26 pay periods, okay, throughout the year. So there's a little conversion to go from monthly premium, right, to 26-week schedule premium. I have a video for that. Look for that in the video library. It's pretty easy to calculate, actually. So looking at the plan, let's just say for kicks that you are going to go with this plan. Let's just say you're shot. You look at this and you go, wow, there's a lot of plans. Let's just skip to the plan benefits. So this is plan number 1. And maybe we want to compare that with plan number 6. Let's just see, right? Plan number 6 costs. Let's just highlight plan number 6 real fast. So you can see the difference, right? So there's about a $15 difference, plus or minus. So let's skip down and look at the plans. Okay. So remember, we're on plan 1 and 6. 1 is a United Healthcare, 6 is HealthNet. Okay. 1 is a silver HMOG, 6 is a bronze HMOA. And you can see the price difference. So let's go check out what's going on. These are just more plans you can look at. You know, they show the EPOs, the HMOs, it gets to the PPOs. This is just in case the page needed more room. So now here we are. I'm currently on page number 4 of this worksheet, which is going to be very similar to yours. Again, you'll see my info here, my age, my zip, my county. The plan that's highlighted again is the employer group plan. This is where you're going to need to pay attention to. This is a quick summary of benefits for my plan, and you could compare with all these other plans, right? So here we were comparing with plan number 6. Do you remember from above? Which is this guy, the bronze HMOA from HealthNet. Okay. So HSA compatible? No. HSA compatible? No. Look at the deductible, $2,350 for individual, $4,700 for the family. It applies to the max out of pocket. Okay, that's a look at that, $2,350, $4,700. Down here, it's $6,300, $12,600. So that's a pretty significant difference in deductibles. Okay, now here's where you're really going to want to pay attention. Let me zoom in here. I'm going to highlight this. Do you see these footnotes right here? This is the part that is often overlooked, and it needs to be considered when you're selecting a plan. Okay, so here we have a highlighted footnote number 1 related to the deductible. So when you're looking at a plan, here's a highlighted footnote number 9, right? Here's a 9, here's a 7, here's a 3. You're going to want to pay attention to these footnotes, you guys, and go down right to the bottom of the page that has all the footnotes. So again, let's make a note. $2,350 and $4,700 applies to max out of pocket. Okay, with a 1 footnote. Now let's go down to the footnotes. Might have to scroll a little bit or a lot. We should be there soon. Okay, here we go. HMO plans, footnote 1. Let me highlight this so you guys can see. All services are subject to the deductible unless otherwise stated. The family deductible is an embedded deductible. When an individual member of a family unit satisfies the individual deductible for the calendar year, no further deductible will be required for that individual member for the remainder of the calendar year. The remaining family members will continue to pay full member charges for services that are subject to the deductible until the member satisfies the individual deductible or until the family as a whole meets the family deductible. So if that's overlooked, that may be a big deal to you. Okay. Some of these aren't so bad. Some of them are. Some say the deductible in full needs to be met. Okay. Some say some are just related to prescriptions. Some, look, all services are subject to the deductible unless otherwise stated, right? This one says maximum number of responsibility. So pay attention to these deductibles, you guys. Sorry, to the footnotes. So if you look at a thing up here, like a lot of times you see these summary of benefits and you think, hey, right, this isn't so bad. And you compare plans, you need to compare the plans for your individual use. Okay, that's very important. So for example, Kaiser plans, they're very known for making sure either your entire deductible or your entire out-of-pocket max is paid for before coverage kicks in. Right? So look at this one. What does this say? Let's highlight this guy. Let me zoom in. Okay, that's 10 out of pocket max, right? So $7,800 for an out of pocket max. Let's go look at 10. Sorry, I got to scroll back down here. Okay. 10 under a family contract. Let me highlight this for you. An insured can satisfy their individual out-of-pocket max. However, an insured may not contribute an amount greater than the individual maximum copayment limit towards the family plan. So see, this one applies to the copayment in relation to the out-of-pocket max. Okay. So please, you guys, pay attention to these. You need to understand your own affordability, right? Mixed in with your own use. Like, how often do you go to the doctor or the hospital? If you go once a year, is it more beneficial for you to have a lesser expensive premium, right? A monthly cost, or is it better to have a higher premium? You pay more for your treatment, or sorry, for your premium, but you pay less for the treatment, or vice versa. So keep these things in consideration when you're applying for a plan, okay? Don't just assume, well, I'm going to go with the cheapest premium. You might want to spend a little more to save on your services when you need them most, okay? When you see the percentages, look at this. I think, CalChoice kind of outlines this, but they make it a little small, right? Co-insurances listed are the plan responsibility, and co-payments listed are the member, okay? So co-payments are the things you're going to do, like when you go to the doctor or when you get a prescription. I actually have a video that outlines that. Co-insurances are the percentages. Usually you're going to see 60%. That means that's what the carrier pays. Okay, so for example, HealthNet is going to cover 60% of the cost of the emergency room, and you're responsible for 40. Okay, so when you look through this, make sure you're looking at the plan correctly. Look at your footnotes. If your summary of benefits has a footnote, you need to investigate and check that out, because if it applies to you in a negative way, you may not want that plan. Okay. Keep in mind that the out-of-pocket max and deductibles are the biggest cost, obviously, with the premium. And if some plans require you to pay the entire out-of-pocket max before co-payment or co-insurance is kicking in, that means you have to pay $8,200 before they cover emergency room, for example. So make sure you're understanding your plans correctly. This also goes down to outline. Let's get to the vision and dental. It is down here in a couple of minutes. Okay, here are your dental options, right? So you're going to see what's included. Orthodontics, right? Included in these plans. Orthodontics not covered or not available in these plans, right? But it's available over on this side. So you're going to want to really make sure you're reading the plan here. So the difference really, and again, this is based on 26 paychecks per year, as we highlighted above. So additional cost for one dependent, right? Versus your cost here. Additional cost for two dependents, right? Orthodontics is included over here, whereas it's not for the employee only. Do you get that? So if orthodontics is a thing, make sure you're reading this correctly, okay? And again, you're going to come down to the summary of benefits, and it lays it all out here for you. So you're going to see like, hey, when I have a cavity, there's no charge for this one. Whereas over here, I have to pay $10 copay. And same with over here, right? Look at your root canal, right? $40 copay versus this one's $100 copay. Okay. Make sure you understand your benefits, you guys. I can't stress this enough. And please call me at any time. Drop me an email, shoot me a call, shoot me a text. I'm happy to walk through any of this with you. Okay. These are your voluntary vision programs, right? That you have two options, like I said. It's only $450 to enroll in vision. IMED provided by Meritus. Look at that. For eyeglasses, you're going to get a $10 copay. The main difference here is your frames, right? This is going to give you out of network reimbursement. Let me highlight this, up to $30 for your frames. Whereas down here, see, it's up to $100 retail value. You see this? Whereas down here, it's up to 180 retail. And your out of pocket, I'm sorry, your out of network reimbursement is up to $70. So there's a big difference. But guess what? Look at the big difference, $450 to almost $6 a pay period. That's a pretty sweet deal. Okay, so I hope this helps. The main takeaway here, you guys, is look at those footnotes. Okay, you have a lot of plans to choose from, which is a nice thing about CalChoice. It's multi-tier, right? Bronze, silver, gold, platinum. Instead of your employer just saying, well, like it or not, you get a bronze or you get a silver, or you have to pay for the gold. So here you can plan up and plan down, which is great. So multi-tier, multi-carrier, right? You can choose from Kaiser, Anthem, United Healthcare. There's a lot of choices for you here. HealthNet. So your employer, if they offer the CalChoice system, they're giving you a lot of options, but that may provide a little confusion in the long run. So as long as you understand this, the yellow highlight is the employer-sponsored plan. Make sure your info is accurate, and then pick a plan that you can afford, whether it's the premium side, or maybe if you're using a lot of coverage and you have kids and you're at the doctor or hospital a lot, maybe you take a higher premium on the front end, and then you pick a plan that pays less or costs less when you go to use it for treatment. So there's a lot to consider. Again, please contact me for any help you need. This is the part of the job I actually like a lot. I like to make sure that employees I work with understand their benefits, understand their coverage, and they're happy with it. It's really a shame. It really is when half the year goes by and employees contact me and they say, why wasn't my bill paid or covered? Why was this, I couldn't even go to the doctor for this or that, or they didn't cover my medicine. There's a lot of circumstances that happen throughout the year and they're not happy. And it's really because they enrolled in a plan and they weren't sure of the benefits. So please take this time when you're enrolling and contact me. I'm happy to help. All right. That's it, you guys. I hope this video helps. And please, like I said, contact me for any reason for benefits education. Happy to help. All right. Take care.